Hey, ladies and gentlemen, Mapletree NAC share price shot up 10%. Yes, 10% in a single week last week. This was despite the fact that MCT only offered at a book NAV of 1.1914, and they refused to actually increase the price for Mapletree NAC when they revised the offer. So how is it that, ladies and gentlemen, at GCP Global, we were able to preempt that the share price of Mapletree NAC would be able to shoot up above the book value of 1.1914 in our last class? That was actually last month. In this video, we are able to share with you essentially what underlies our thinking, why we'll be able to preempt, and why we think certain facts that Mapletree NAC shared, pertaining to their book value, is actually up for questioning by investors. And remember, ladies and gentlemen, as investors of REITs, you may not necessarily have to incorporate it 100% all the time, what the REITs actually present to you. In fact, you must be able to foretell and able to actually predict and forecast based on your understanding of the REITs, as well as the underlying asset, as to essentially how are you able to encapsulate a better value, like in this case, Mapletree NAC, and wait for a better price to sell, which is exactly what we shared in our last class in February. So in this video, this is what we're going to share with. So, ladies and gentlemen, you can see that this was actually Mapletree NAC's numbers as of the last set of reported results. And so what happens? It says that at the 30th of September just last year, that's roughly about 6 months before, its NAV is 1.265. And you notice that this NAV at 1.265, so when the offer came at the end of December last year, on the offer for Mapletree NAC by MCT, we were shocked. And you can see in my last video, I've actually said that, wow, the price that MCT is offering is not justifiable, right? Because the NAV, how can it be such a big difference at 1.1914 away from the NAV price as of 30th September 2021? Okay, so as usual, delve deeper and you can see what happens. And this is the justification for the valuation of properties by Mapletree NAC at the end of the year, and you notice that, they have used the revision, over 1 month. Instead of using the valuation as of 31st September, they have used the valuation as of 31st October. And what materially happened, they say that the biggest asset, Festival Walk, was hit by a valuation loss of 100 million. Why? Because the valuers have actually valued it based on lower market rent as well as lower transacted rent. But wait a minute, ladies and gentlemen, and who is the valuer again? It's Knight Frank. But if you look at the valuer of the previous end of the year or end of the interim report, that was 30th September, it was actually a different valuer, right? And so are the assumptions by the new valuer valid? Now, this is something that you, as the smart REIT investor, should be able to synthesize, decipher, and differentiate. The other key thing that they have mentioned is that the valuation value of Gateway Plaza is also lower because they are facing lower transacted rents at Gateway Plaza. But ladies and gentlemen, for the last 3 years now, Festival Walk and Gateway Plaza have been experiencing lower transacted rent as well as local market rent. So as an investor, ladies and gentlemen, we at GCP Global actually guided our investors that, hey, this is and has been going on for the last 3 years, but I think, to large extent that would come to an end, and that is where we'll then put a floor base to the base price of NAV. So it would mean therefore that 1.265 as NAV, or it's revised 1.229, taking out the dividend portion, would be more relevant as an NAV estimate as opposed to the 1.1914 offered by MCT. Of course, MCT is trying to take over Mapletree NAC, of course, they will try to offer you a lower base value. Then they need to pay less. After all, the all cash option that came out last Monday did not increase the price, underlying price. Is just giving you another cash option. And what was the other factor? The other factor they say is that the fair value loss on SMB. What is SMB, ladies and gentlemen? This is the SII Makuhari building, which was actually leased to, was it Sony? Yes, to one of their tenants. That's actually Seiko, rather, not Sony. Okay, they have mentioned that they will not renew their rent when it expires 30th June 2024. Oh my goodness, hang on a minute, ladies and gentlemen. Let me just take the calendar. Yeah, we're in the year 2022. And if somebody tells you, right, that your rental will not be renewed in what? This year? No, not June this year. Is it June next year? No, not June next year. Oh my goodness, 2024, that is almost 2 years, 3 months down. And then you quickly revise down your NAV value, you know, by as much as, like in this case, as mentioned, because this was mentioned as a justification for the revision down of NAV, by as much as how much? Oh my goodness, almost 100 million, right? So this obviously helps to justify a lower NAV relevant in the MCT takeover. But at GCP Global classes, we question and say that, hey, this is too ridiculous, right? You know, the valuation base of 100 million, and I'm surprised that not many shareholders of MCT or MNAC has actually voiced this out to the management. You know, but of course, you know, REITs basically will try to get the best price, in this case, the lowest price. So it is really up for shareholders to actually resist if you can't and have a solid basis. So at GCP Global classes, you can see, ladies and gentlemen, that we delve into very deep, in-depth issues like this. We spot for you the inconsistency, and that's why, you know, having attended our classes, you notice that if you were an Mapletree NAC shareholder, last week was the best because the share price went above their perceived book value of 1.1914, and we are able to enjoy a higher profit. So you can see, ladies and gentlemen, you know that we have been one of the critics of this particular takeover. You know, I'll call it takeover, not so much a merger, because MCT, you know, I don't know what, you know, essentially what they were thinking, but offering MCT shares at 2.039 after almost a 10% drop in less than 2 months, you know, again, this is quite unprecedented, you know, in MCT share price movement, you know. So why can't you wait for MCT share price to move a little bit higher before you table the offer for MNAC, right? Would it not then be more advantageous to MCT shareholders? And then you can see how the market reacts, right? The moment they announce the deal, in less than 2 days, the share price plunged even another 10%. So 220 compared to 180, that's almost a 20% drop. Well, where is the shareholder value enhancement therefore, ladies and gentlemen? You decide. Okay. So as usual, ladies and gentlemen, at our GCP Global classes, we emphasize, you know, as what the press is profilers, okay, that we focus on the metric that is used similarly by Warren Buffett, that's return on invested capital and EV/EBITDA, to actually help you to evaluate REITs, mergers and acquisitions, and help you to ascertain whether you're getting a good, fair price for your value. Okay, so once again, ladies and gentlemen, if you notice, essentially we have analyzed that the upcoming merger between ESR and ALOC, you know, I think many of the shareholders are smart enough to know, you know, that they are getting a good deal, and that's why they say yay to the union. So for us, for you all to look at other REITs that may continue to benefit in the years to come, as well as the mergers, do join us for our next class on 7th of May. And at today, for this week, you are able to enjoy the early bird special. So do sign up at GCP Global website. And once again, if you enjoyed today's video, do smash and subscribe as our member, and do send us an email at gcpglobalsg@gmail.com if you have recommended a friend who have become a subscriber, because you stand a chance to win a lucky draw at the end of next month. So once again, see you next week for our next video.